Good evening. Thank you for joining us on Straight Talk. Our guest this evening is Mr. Tom Gaffney, the Regional Managing Director of CBRE for Hong Kong, Macau and Taiwan. Born and bred in Australia, Tom came to Hong Kong 21 years ago and has called Hong Kong home since. CBRE is one of the largest global commercial real estate services and investment firms. When Tom joined CBRE in 2016, he was the youngest geographic leader in CBRE globally at the time. And under his able leadership, the business has taken a good position in most markets. Welcome, Tom.
Thank you, Eugene. Thanks for having me on.
As you know, Hong Kong's border has reopened like 6 months ago, and we have started on the path back to normality. And with Hong Kong trying to regain our international reputation of being a very welcoming city with like Hello Hong Kong and a series of crowd puller events, many have expected Hong Kong's economy to recover. So in your view, how have we done so far?
Quite well. I think we're on track, but I think we need to be cautious and understand that it's going to take a little bit more time. We've seen our GDP grow around about 2.7% year to date, and we're seeing tourism coming back. Year to date, about 13 million visitors so far, and a lot of people coming for, not only just the shopping and the experiential part of Hong Kong, but also the great sporting events like the rugby sevens, the golf. There's a lot to love about Hong and the reasons to visit.
Right, Tom. The reason why we invite you is because you are in the real estate business, and it is a good indicator of how things are getting on, especially from the retail market. Mm-hmm. You said Hong Kong has come back, and sounds like you're confident. But do tell the viewers, how are the retail market doing? Because pre-COVID, things were doing quite well until we have dropped everything down to minimal. So how have we done so far?
So far, it's tracking well, but I think everyone expected when the borders reopened that it would be a V-shaped recovery, and we haven't quite seen that. As I mentioned, the tourists are around 13 million back by this point in the year. We're seeing retail sales up. Year to date, we're up around 21% year on year, and that's really being led by the luxury and the watch and jewellery sector, which are up around about 75% year on year in terms of their terms of sales. So we are starting to see a recovery. But if we look at the type of tourist that's coming back and consuming our retail products, it's a different type of tourist that we saw pre-pandemic. Yes. And a lot of them are into more experiential type experiences.
Yeah, since you mentioned that, Hong Kong has always been known as a shopping paradise, I'm sure, when you first came like 21 years ago. Yeah. But things have evolved. As you just said, our tourists are more sophisticated, and they may not only come here for the buying. So how can Hong Kong still be attractive, especially at the retail end? Because people will pay higher rents, or there'll be more demand for retail shops if there is a strong demand. So how do you say about that bit?
Demand is coming back. So if we just touch on the tourists for the moment, we're seeing a lot more day trip type tourists coming, and they're experiencing Hong Kong not just for the shopping, whether it's the food and beverage or hiking or going to see the tourist attractions, really immersing themselves in an experiential type of travel. But what that is in turn doing is spreading across Hong Kong in terms of sales, and as a result we're starting to see demand from the retailers improving, and what that will improve on will mean that we'll see more shops being taken up. At the moment, vacancy for retail sector is around 12% across Hong Kong, but we think of all the subsectors within Hong Kong's real estate market, retail is the one that's going to rebound the most quickly.
Right, Tom, I'm sure all the viewers, including myself, when you walk around or when you're in the car in the different parts of Hong Kong, like Causeway Bay and Tsim Sha Tsui, it's very disheartening to see a lot of shops are actually closed, actually vacant. So we used to see a lot of premium shops like the pharmacy or those luxury brands that people selling. There used to be a lot of real estate agents as well. Yeah. So how is that faring? When you said it's 12%, what are the main type of shops that has been closed?
So Hong Kong's been hit poorly in the retail market for over 5 years. First we had the social unrest, and then we've, a period of time with the pandemic. So, for the retailers, they've had a very hard time. What we've seen is a really really big change in the landscape of the retail sector. And so what was once filled with watches and jewellery and luxury and, as you mentioned, pharmacies is now more of a balanced type tenant mix. And so we're seeing a lot more food and beverage, we're seeing medical, we're seeing the fast fashion brands, as well as the watch and jewellery and luxury brands coming back. And we foresee that that is a trend that's going to continue, certainly in the years to come. Rents have dropped significantly, Eugene. So from the peak in 2014 to today, they've dropped over 70%. And since the pandemic, they've dropped 40%. So for a retailer coming into the market, it's a lot more affordable for them to find key locations at a much better price.
Mm-hmm. Since you mentioned retail, I'm going to ask you about Hong Kong's our Financial Secretary, Paul Chan, has issued the second round of consumption vouchers on the 16th of July. Do you think that will help to boost the retail, or is kind of aware of the effect already? What do you think?
It's still going to certainly help. These stimulus measures are always welcomed, but the sectors that are benefiting the most is really the food and beverage. A lot of that is being tipped into family meals or dinners out, etc. So we think perhaps the stimulus measure is probably coming towards the end of its term, but at the end of the day, it's still very much welcomed by the consumers.
Well, Tom, Hong Kong is also known as having one of the most expensive real estate. I mean, even in shopping rents, we hear of astronomical rents when you hear it in the newspaper, but they do survive, which is good to know. Like, for example, Tsim Sha Tsui was known as the second highest in terms of rent in the world, but of course that has come down, as you said, like 30 or even 40%. Yeah. So do you see those glorious days ever be returning one day in the retail market?
I will never say never in Hong Kong. They may return one day, but it certainly will take some time. I think the approach that we're seeing from the retailers is a lot more sophisticated this time round. They're cautiously approaching the market in a very systematic way. We're not seeing the craziness that we saw in 2013 where people were just taking up shops everywhere. The other thing is that we have only seen sales in a positive territory really for the last 6 months. So the retailers need a bit more time to recover before they start looking at their expansion again in those core markets like you mentioned, Tsim Sha Tsui. Our view is that the recovery will likely occur in the core 4 markets first, which is usually Tsim Sha Tsui, Central, Causeway Bay and Mong Kok. And the reason for it is really around tourism. That's where a lot of the tourists flock, and that's where the high degree of discretionary spending is usually occurred.
Right. Another area that I'm sure the viewer is going to ask you is about e-commerce. A lot of people are buying off from the phones, from the internet. I mean, how is that going to affect the retail? Well, in other words, if someone wants to take advantage of the retail market here, what will be kind of the driver that you want to suggest to the viewers?
Well, at the moment, the online shopping has certainly, been very prevalent ever since the pandemic because we had no other choice but to use sort of online shopping, etc. So people have become a lot more sophisticated around the use of those apps, etc. However, overall, it's still a small percentage of the overall sales of retail within Hong Kong. And Hong Kong is a shopping mecca. It's all too easy. Our amazing transportation systems, our malls, the interconnectivity, it makes shopping just too easy in Hong Kong. And as a result, I think what we're seeing is that retailers are really taking advantage of the depressed rents at the moment, tourists coming back, sales improving, and as a result, they can lock in a great deal now, probably the best they've seen since 2003. So I think retailers over the next 12 months will take advantage of this.
Since you mentioned the tourists coming to Hong Kong, and you being from Australia, you've got people from Australia and other places visiting you, since you're running the firm in this part of the world. What will draw more visitors to come to Hong Kong, do you think?
Oh, Hong Kong is a wonderful place to visit and to live. I mean, whether it's the education, the medical system, the schooling, it's safe, it's interconnectivity with China. I mean, it's a very hard place to beat. But besides that, it's a great place to visit, whether it's sporting activities. We had the rugby sevens reopen this year, which was really well received. We've got amazing golf courses, big international competitions for whether it's the food and wine, and we see all these amazing concerts coming back. So I really feel that the Hong Kong government are doing an amazing job of really pushing for Hong Kong to reopen and be the world city that it is.
Well, let's move on also to the actual office market. You know that in Hong Kong we have many multinational companies, mainland Chinese enterprises. They all come to Hong Kong and set up offices. But unfortunately, in the news, it says a lot of them have moved to Singapore because of a pandemic policy at that time. Has that trend actually stopped, or how many actually have left Hong Kong, or it was just a myth?
To be honest, it was a bit of a myth. Overall, we only saw a small percentage of multinational companies actually move their headquarters out of Hong Kong, and most of those were, US or UK-based firms. But a lot of those firms that moved out were actually backfilled by the likes of companies from Switzerland, Germany, China, Singapore. So overall, we haven't seen a huge amount of MNCs leave Hong Kong. MNCs still remain Hong Kong as the key base for Asia.
Tom, let's take a break now, and viewers, stay with us. We will be right back. Thank you for staying with us. Todd Gaffney, the Regional Managing Director of CBRE, is with us. And we have been talking about how the retail and office market have been doing since our borders have opened. So, Tom, we have touched on those areas briefly, and I'm sure the impression the viewers would have got by now is that retail is picking up and the office has come down, and actually not too many MNCs have left Hong Kong. So, in actual fact, how much of the rent of the office have come down, in your opinion?
So since the pandemic, Eugene, it's come down over 30-35% during that period of time. And at the moment, we're experiencing a huge amount of vacancy. Approximately 15.6% of the entire office market of 85 million square feet is vacant. So right now, to put it in simple terms, we have 13.5 million square feet vacant. But the bigger issue that we have is really the huge amount of supply coming online in the next 5 years. We have a further 10 million square feet being built over the next 3 to 5 years. And so we have this huge glut of office space. So rents are going to remain depressed for some period of time. As I mentioned, they've come down 30 to 35%. We're forecasting probably another 5% down this year, and then we'll have a period of stagnation. So for office occupiers, this is a really opportune time to upgrade their real estate or get fantastic deals. And so what we're seeing is that a lot of the MNCs are using this as an opportunity to upgrade their real estate in the Hong Kong market.
We often use Singapore as a sort of comparison for many things in Hong Kong, and as I said earlier, people were told that many of our MNCs and companies actually moved to Singapore, including all our talents. Would you say that Hong Kong has lost in this rivalry between Singapore in this round at this stage?
Unfortunately, Eugene, you're probably asking one of the most patriotic and loyal
This is
people in
talk.
Hong Kong. Yeah,
Straight
so
talk would have the direct
I don't
answer.
think they have. I think Hong Kong is going to be the winner in that. I mean, let's just look at the facts. Not many MNCs have left Hong Kong. We have a very proactive government. We have a fantastic rule of law, great tax systems here, access to China. And the other challenge with a lot of families that left and moved to Singapore was around housing their children in schooling. Accommodations become extremely expensive there. So, we're starting to see a lot of families repatriating back to Hong Kong. If we look at the peak time during the pandemic, I think we lost about 260,000 people from Hong Kong. But, we've seen in excess of 60,000 people returning. And I think the government are doing a wonderful job at really being proactive to lure talent back to Hong Kong. And so I think that's a trend that's going to continue. It's a very hard place to beat living in Hong Kong.
Right, and looking at general real estate investment, what are your views and what are your tips for our viewers?
Yeah, so investment volumes obviously have come down this year. So, if we look at the first half of this year, we've only seen about $18 billion worth of transactions in the first half. If we compare that to last year, that was about $36 billion in the same, so about half.
Right.
And, we've been fortunate at CBRE that we've concluded, nearly 50% of all those transactions in that period of time. But what we're likely to see is, whilst interest rates remain high, that a lot of investors are probably going to take a wait-and-see approach. But if you were to ask me which sectors we see as probably the most positive, certainly retail, as we see that one is the one that is recovering the most quickly, followed by hospitality and hotels. We're seeing a lot more activity and interest in the hotel sector. And then, of course, industrial and, finally office because of the huge amount of supply. But, if people were to buy in the office as an owner-occupier, you could argue this is the best time in many decades, given that the rents and capital values have dropped about 30%.
Right. Tom, another thing I want to bring to your attention, recently we read a news article that one of the luxurious real estate investment in Hong Kong, actually the deal has fell through. That kind of never happened in Hong Kong. You only hear high prices one after another. Is that any indicator of what's happening?
No, I don't think so. I don't think we need to panic. I mean, this is just a one-off event. We're not quite sure exactly the reasons behind that individual transaction. However, the fundamentals remain strong for Hong Kong. And I think with any property investment, you've just got to take a longer-term approach. I think with the economy rebounding, we're likely hoping to hit a 5% growth this year. Hopefully China will rebound next year. Interest rates should hopefully stabilise in 2024. Hong Kong is going to be set for a rebound. So all I would sort of suggest is that, we just need to be a little patient in the short term, and that the market will work itself out. And I think the next couple of years in Hong Kong are going to be fantastic. Our
Chief Executive John Lee was here a couple of weeks ago, and he said that he's expecting the growth to be 3.5 to 5.5. And then he's very happy to hear that you mentioned 5 today. So it looks like we are heading for quite a positive outlook. And also recently the government has relaxed all the mortgaging rules first time since 2009. Yeah. What is that telling us? Is the government concerned about the market, or they just want to make sure we have a stable market? What is your take on that?
I think it's more the latter. They want to stabilise the market and inject a bit of capital into it and get some more transactions going. I mean, I think for the commercial sector, lowering the loan-to-value ratio from 50 to 60% will only be a good thing. But that will really benefit the small cap deals. Anything up to about $300 million will be really beneficial. But if we look at the residential, we foresee that the sector's pricing between sort of 15 to 20 million. We might see a slight price reduction as sellers hope to lure more buyers to buy their products. So in the short term, we might see some price correction. There is quite a bit of oversupply coming online for the residential sector in the years to come. But once that sorts itself out, never turn your back on the Hong Kong real estate market.
Very interesting comment. You said there are more supplies coming. This is something we've been trying to work at. Yep. I mean, the Hong Kong housing issue. Do you think Hong Kong housing issue will be overcorrected by the government? Now I'm looking at the government, they're doing everything. Of course, they say this 5 years, coming ahead, 5 years, may not see all the supplies in public housing, but more coming in the second 5 years. So from a commercial point of view, is our government doing too much? Or will it lead to too much of overcorrection?
I don't think so. I don't think so. Maybe in the short term we're going to see a little bit of oversupply, but as I say, I think that will correct itself in the next sort of 3 to 5 years. I think the way that they're planning out the supply has been well thought through, and they're executing on that. But I really feel that the beneficiaries of the investment market will really be around the retail sector in the next sort of 12 to 24 months, and then followed by the tourism in terms of an investment profile.
Right, Tom, you've been here for 21 years. Yeah. I think you've seen one of the worst times Hong Kong has been through in terms of challenges. We have the Occupy Central, or the political events, or the social unrest. We have the pandemic, and we're still here talking about real estate. Yeah. So what is your view on that? Because you do have many international clients, you have your family, friends all over the world. All this geopolitical stuff, how much is it affecting Hong Kong, do you think?
Eugene, I think the last 4 to 5 years have been extremely hard for Hong Kong. We just need a break. As you mentioned, the pandemic, and then obviously the social unrest. It's been a very, very difficult period of time. But let's just look at the core fundamentals of Hong Kong. It's access to China. China is on its recovery phase, hopefully in the next year or two. We've got strong positive growth in our GDP. We've got very low unemployment in Hong Kong, just 3%. So we're backed by a strong labour force. So all these things are pointing in a strong direction for a strong economy, strong rebound. And that will translate back to the Hong Kong real estate market. At the end of the day, Hong Kong real estate is in our blood. Everyone loves to talk about it, loves to invest in it. So I think, we've just got to be cautiously optimistic and somewhat patient in the short term.
What would be your advice to our viewers in terms of, in view of all these challenges? I mean, we know it's going to come back, but in the meantime, what can we do, or what shall we do to making sure we are with the boat as it goes up again?
Yeah, if you don't mind, I'd like to answer that in two ways. Firstly, from an investor angle, I think, whilst interest rate environment remains high, we just need to sort of be cautious and pick the sectors that we look to invest into cautiously. As I mentioned, retail, hospitality and hotels as well as residential could be good picks in the short term. In terms of an occupier, you're probably not going to or haven't seen a time like this before. And certainly in my 21 years here in Hong Kong as an office occupier, this is some of the best times to lock in great deals for long periods of time in great buildings. And so there's some amazing new developments coming up, whether it's in Hong Kong Island East or across in Kowloon East. We're seeing some really fantastic developments being done. And same for retail. I think, as I mentioned earlier, this is the lowest we've seen rent since 2003. So as a retailer coming into this market, you couldn't ask for a better time.
Right, Tom, you are, as CBRE, you do look after Hong Kong, Macau and Taiwan and other parts of the world. Is Hong Kong the only place you will invest?
No, I'd like to invest in my home country of Australia and the UK. I think it's good to diversify and spread your investments if you're able to. But at the end of the day, I feel very comfortable investing in Hong Kong and have been doing so over the last couple of years because I take a longer term view and I back Hong Kong. I think being on the neighbour of our dear friends China is only going to benefit Hong Kong in the longer term.
Tom, I'm going to wrap up this interview by asking you a direct question on our title of the show. What are your predictions of the commercial property market in Hong Kong, and when can we expect that it will come back in full swing?
I'm cautiously optimistic. I'm positive about the market, Eugene, and I really feel that 2024 could be our year. If the geopolitical things stabilise, if interest rates stabilise or even somewhat come down, I think that's going to translate to a lot of positive buying in Hong Kong across all sectors. As an occupier, as I mentioned earlier, you couldn't find a better time now to enter the market or to look to restructure your deal. So I really feel that as an occupier, the time is now. As an investor, it is over the next 12 to 18 months before we start to see a really strong recovery.
Tom, you're from the commercial market, and I want to tell you that many of the government officials do watch this program. And if I allow you a minute, what will you say to our leaders right now? What shall they do to making sure Hong Kong to be maintained as a good international financial centre, a place that people want to come to Hong Kong? Then it will be a good bridge for us and for the mainland and the rest of the world. What will you say to them?
I would say continue what you're doing. I think what they've done certainly in this new government have been very proactive in terms of luring talent back to Hong Kong. I think, watching these stimulus measures carefully and the effects of that and whether that's having a pronounced effect, a positive effect is one to watch. I like what we're seeing around sort of lowering some of these spicy measures around the, dropping the loan to value on the mortgages. That will inject a bit more excitement into the market. So I think overall they're doing a fantastic job, and also their international campaign of luring talent back to Hong Kong. So I think continuing more of the same. At the end of the day, you can't beat Hong Kong as a place to live.
Very good to hear. So thank you, Tom, for your valuable insights on Hong Kong's commercial property market. It is good to hear that this sector remains resilient. Despite challenges going forward, adaptive strategies and agility will be the key for seizing the opportunities for more growth. Have a nice evening and see you next week.